wholesale, and I wanted to go over, what's to come for used cars. What's the outcome of all this, and what can we be expecting? Now, again, this is all speculation, so take it to heart, but I'm also going to back it up with some information that we've been looking at for over a decade and being involved in the auto industry for 30 years and managing inventory for 20 years. I've got a pretty good indication of what's coming around the corner. The curveball is going to be these tariffs and the repercussions of that. Now, what I'm going to do on that is kind of base it on customer interaction, customer sentiment. What do they feel like um, that they're going to do? So just yesterday, Trump announced that there are going to be tariffs applied on any imported vehicles, obviously, and even non-domestic domestic vehicles that are coming from Mexico and Canada and so forth. One aspect of that is it's not triggering until April 2nd. So why yesterday sign this when it's going to be another week before they go into place? And to me, that's just a way for him to leave a window of time, maybe a week, to work out some of these kinks or negotiations. He's going in serious and not playing hard, not playing ball, or he's playing hardball, and he's going to make sure that he's going to use that as a negotiating tactic leading into April 2nd. I do think they're going to call his bluff, and I think, again, there'll still be probably another month of back and forth of who, why, and why, how things are going to happen. So, tariffs aren't in place yet, but obviously he's serious about putting them in, and I think a lot of it is due for the American economy. These jobs that come back in manufacturing and so forth, which could be a good thing. Is this a long term play? And any dealers that obviously have any import cars, it's going to be a concern, but. There's going to be ways for manufacturers to overcome these a bit, meaning think about rebates and incentives, right? We used to run with 3, 5, 8 grand of rebates, right? So if a 25% tariff firm gets hit on cars, or 10, or whatever the number is going to be coming from whatever country, some of that could be eaten up by some rebates and incentives. The other fight back is, hey, we're going to from the current administration, we're going to lower taxes and things like that to where, and more jobs are going to be available. So this tariff won't eat up as much as and continue to drive down inflation. So tariffs won't be as big of an impact. Whatever the argument and whatever you believe it be good or bad for this current situation is what's going to happen with the inventory, both new and used, and what's going to happen to the market. So one initial thought of mine is if this holds, and anybody who's been contemplating buying a new car might rush to these dealerships to buy the non-tariff cars, right? The cars that haven't been hit with these tariffs yet. And there's probably a 90-day supply of those cars sitting out there. So I think there could be a rush of buyers to go into these cars to save a few thousand before the tariffs hit. And if that happens, that leads to more trade-ins, right? So that could be a good thing for the used car market as far as bringing more cars available. So you got to think about that. That if people do rush out to buy these cars, the pre-tariff cars, they'll be probably trading in quite a bit of cars too, and so the supply of used cars should uptick with that. Now, if we sell a little over a million cars a month, new. Now, again, that's not just total retail because you got to include some of these fleet cars and stuff, but that could be another influx of, and if a third of those cars come in with trade-ins, those deals, that's quite a bit of influx of used inventory available. So that could happen, which I think is a strong probability, because if that's not a strong probability, what I mean, then these tariffs aren't going to matter much. Customers aren't going to buy anything. You see what I'm saying? So if these tariffs are going to be a bad thing and it's going to increase prices and customers aren't going to buy, then that's where the whole economy, that's where things slow down. And that's where I think people will end up going ahead and taking advantage. If tariffs are a bad thing, they're going to go out there, take advantage of the ones with non-tariffs and start buying them. Now, if they don't buy and just totally cut off acquiring cars, which isn't going to be possible. People need, I was just in a car accident 2-3 weeks ago, and car's still in the shop, right? But if it got totaled, I need to replace it. So there's going to be replacement cars. Cars are still going to continue to sell, and it's just a matter, are they going to go new or to used? So if the tariffs hit, will they transition to used? Okay, that's the next question. There's a shortage. So people are like, well, then that's going to bring up used car values. Here's the problem with the used car situation, though. There's not a lot of cushion between retail price and wholesale, okay, right now, and it's going to get worse. And I'll show you why I mean by that in a minute. But over the next 45 days, margin compression is going to get worse. And so I bring that up because a lot of people are in a negative equity situation and they can't roll that negative equity into these cars that have that compression of margin. So they almost need to go to new cars and use rebates to get out of these car situations they're in. So used car could be an option, but that a negative equity situation, but you roll in interest rates into that still being high, really limits the amount of used car shopper activity. And I'll show you the data on that here in a minute. So I'm gonna bring up some articles. I'm gonna bring up shopper indexes and dealers volume to kind of back up this information I'm going over here, the data. But again, my thought is there will be some kind of deals worked out, especially Canada, Mexico type of scenario. I think this next week, we'll pad that for those conversations to be having. And if not, they'll call their bluff, and then it'll end up happening probably before the end of April. With that, then you got to talk about Toyotas and Hondas and Subarus. Hyundai's decided to build a factory here. That should be a long-term good goal. But with that commitment, will they be some leniency on tariffs for their incoming cars until the factory's built? So you just never know where the negotiation goes. But that's typically what tariffs are, a negotiating ploy. So with that being said, I would be really hesitant on pushing inventory out, and I'm going to share my screen. Let me do this. Not pushing inventory out, but just I've been seeing some dealers stocking up on inventory. I was just on a call with the Subaru account, and he said the dealer went and bought 100 used Subarus that are going to come to the lot. I have another dealership that's ramping up his inventory and trying to make it up with, increase inventory to increase sales. And again, because here's the thing, they compare this. Automotive News did it right here. I didn't pull up this, but this first headline here talking about biggest threats yet, and kind of could be surpassed COVID and everything else. Well, with COVID, we got this big influx of sales of the fear of missing out happening, but also you got to remember back then the COVID people had additional income, additional money coming in to their accounts, and so they're willing to spend money and buy these cars before they ran out. Well, we're not going to run out of cars; they're just going to be packed differently. So let's go take a few looks at headlines. But before I do, let's look at some data, because I talk about a false positive. I did it a couple weeks ago on another video. And what I mean by a false positive is there's a lot of positive things happening. Wholesale volumes are up. The values of cars are up on used cars. So the no sale rates are looking better, or the sale rates at the auctions are looking better. So, I was trying to zoom in on those. Let me see if I can do it over here. Okay, I can. So what we're looking at, again, I typically show you this. Shopper, if you haven't seen this before, go reference some of my older videos, but the red line represents Google trends for used car shopper indexes. And those trends go back, we tracked it for 10 years, but on this chart, it goes back to 2020. Okay, COVID shutdown. Now, the green line, what you're seeing is our dealers' 2-week sale volume. What have they sold in a 2-week period? What percentage? We want our dealers to sell 50% of their inventory in 2 weeks. So that puts them on pace to sell 100% in 4 weeks or in a month. So if you look, again, the shopper index really at a 5-year period hit the peak on March 20th of 2021. And that tax season hits, our dealers' volumes go up. And then as the tax season drops off, by May, it dropped down 20% shopper index. And then our dealers' volume has fallen since then too, going from a 60% sale rate and down into May's in the 44, 45% sale rate. Then in 2022, March 12th, shopper index peaks 80%. That's 20% below the previous year. So get that. 2021 to 2022, there's 20% less activity looking for used cars, and our dealers' volume then hit a 49% high, which was about 11% lower than the previous year. Roll into 2023, you get this February, March peak, but it hit more in February because we had a little bit of a January push. a whole other story. I did a video about that. But again, at 68%, that was what? 12% lower than the previous year and quite a bit lower, 32% lower than 2 years ago. So each year we're getting less and less people looking for used cars. So I seen one of X post, a Twitter post about the shortage of used cars coming and everything. And I'm like, well, there's only a shortage if demand exceeds availability. So as you're seeing, demand is dropping every year on used cars. Now we will ended 2024 and we hit a February 27th peak at 61%. Shopper index dealers volume increased to 56%. But by April, shopper index drops, 15 plus percent. Dealers volumes drop and it continues to drop through June. Now we had a July, August uptick, and then it drops out through December. Now we look here, 58% shopper index was the highest. Again, if we compare to last year, that's a 3% lower, and then each year it's lower and lower. And you go back to 2021, you're talking a 48% drop off in shopper activity, 42% drop off in shopper activity. That shopper activity is dropping off like it has year after year after year. So where is it going to be in April? That's just telling me the demand is not there. Interest rate, negative equity, everything I talked about. The delinquencies on cars is high, car payments are high. So that's just telling me we don't have the demand to even worry about the supply. I'm not saying that it's not. There's plenty of cars out there that are just not hitting dealers' lots because we didn't do leases a lot through the COVID period, and so those lease returns aren't hitting. They're sitting on customers' driveways, but then there's so much in negative equity they can't get out of it, and especially try to roll it into a used car where the books just won't hold that kind of money without a lot of money down. And again, these customers don't have money down like they did during the COVID period because government wasn't shoving it down their throats. So in the meantime, that's what those two charts represent. And you could see those same green and red charts here. What the blue indicates is wholesale. So as the shopper index increases, as dealers' volume increases, the amount of cars wholesaling, we went from a 58% sale rate to a 66% sale rate according to Black Book for wholesale activity. So more cars are leaving the wholesale auction. Same thing happened previously. We started selling more cars back here in 2021 in March. And guess what happened to the wholesale rate? Jumped up to 75%. As dealer sales dropped off, guess what happened to wholesale? Wholesale drops off, okay? So the false positive is it looks positive. More cars are selling at wholesale. They're going for more money. Well, why? Because dealers are replacing what they just sold out of, and everybody's scrambling to get some inventory. Okay. But guess what's going to happen as the shopper index drops off and as the dealer's volume drops off, so does wholesale. Okay. Now, the other black line here represents the average age to retail. So guess what happens as things slow down through November, December, January, February, the black line, the average age to retail a car increases. But as we sell cars, the average days to turn goes from 43 down to 33. So it builds back up as we slow down our sales, but then all of a sudden sales happen and average date. So year after year, average age of vehicles, the retail turn, just in 2023, built up to 63. We started selling cars that dropped down. So we had this buildup of average age because it's been slow going through December, January, February. Now, February, March, sales happen. So average age going down. So it seems like cars are moving faster. It's just a common theme into this whole process. So what's going on? Well, consumer confidence declines, okay? So fell by 7.2 points in March to the 92.9, okay? So shopper index is our confidence, consumer confidence has dropped off. I showed you that year after year after year, there's less customers buying cars. Tariffs are going to be questioned. They don't know how it's going to impact. They're going to sit on their hands because tariffs aren't just impacting cars. It's impacting groceries. It's going to impact everything. Okay. And then you read things like the Lane Watch, typical April trends ready to see in March, that wholesale looking good. And that wholesales are up and all this other stuff, surpassing highest pre-pandemic pandemic market increase. Okay, so all this wholesale information seems like it's a good thing. That's the false positive. It's positive news, but it's going to lead to false results if the customers don't come. Okay, so wholesale is up. Wholesale values are going to be up as we replace. But come April and May, guess what? We're not replacing anymore. Wholesale drops off. Values start dropping off. Books don't catch up. We're going in a now all of a sudden the books start adjusting, and we don't have the spread. We're gonna have to drop prices to get the people's attention, and we don't have the spread. And then let's talk about filing. Okay, as of March 15th. Okay, we're only 1.7% difference in filings from this year to last year. So we're pretty much on pace of filings. It's really down 2%. We got 2% less people have filed yet. But here's the amount refunded. Okay. The number of refunds is up 4%. So more people have gotten their money, 49.8 million versus 49.1 million comparably. So more people have their money right now than they did previously. Now it's up 5%, but you're talking $160 that they're getting. Okay. So it's not a ton of money. They say, oh, the returns are higher. And there's more people still need to file their returns. Yes. But more people have it in their pocket. So it's about a break even, really. So if we've already seen previous last year activity drop off and the numbers are the same for tax, okay, then let me go ahead and stop sharing my screen. You can see there's just not the market there. So what are these tariffs going to do? Okay, they're just going to maybe make new cars higher priced. That'll take a few months. We got a 90-day supply or more of new cars sitting out there without these tariffs on it. And so by then, things will probably be figured out. Again, countries agree to disagree, or agree to take tariffs away or reduce them, and start negotiating with the administration, with Trump and so forth. So here's the thing. Year after year after year, we get a slowdown starting now. I wouldn't be ramping up my inventory right now. I could be wrong, and this could be that next COVID boom. But again, another story I just came off of. Whatever you do, and this is what I said through COVID. I wouldn't say go dump cars and everything else. What I said through COVID and what I would say now, carry to your current 2-week sale rate. If you went from selling 40 cars in 2 weeks to now 60 cars in 2 weeks, then start carrying more cars because the sale rates are going up, and always be a buyer at current market conditions. Okay. You don't want to go buy a bunch like that Subaru dealer bought 100 cars. Could be the best thing you ever did. Like if I could have done that pre-COVID and boom, he hits a home run. But if he doesn't, what's coming forward over the next 60 days is pretty scary. Okay. And does consumers have more money in their pocket? No. Does consumers have more confidence? It doesn't look like it. Consumers have better equity or more money down? Probably not. So there's this more going against it than with it. And I'd rather be playing it equal and playing it safe. Buy 100, sell 100, buy 100, sell 100, then go buy 200, sell 100, and then I'm stuck with 100 cars in this market because again, who knows? Cash for clunkers and all this other stuff that got stimulated by that the government done to stimulate the automotive industry a while back and get these gas guzzlers off the road. So don't know what's going around the corner, but I can tell you what traditionally has come around the corner, and only tariffs in my eyes are going to make it worse as far as consumer confidence. Up until interest rates go down and there's enough padding in rebates to make negative equity go away. Those are the two things I think will drive consumers back into the market at a higher pace than we've been seeing over the last 3 to 4 years as it's been trickling down year after year. So only a shortage if there's more demand than supply. I've seen demand dropping 15, 20+%. So if supply drops with it, it's about an equal game. And that's what we're seeing right now. And the tariffs are just going to almost make it worse or drive more people to new cars prior to the tariff hits, which will bring in more trade. So a little lengthy on this. Could be putting my neck out. But again, I don't think telling you to keep your inventory lean and clean is putting my neck out there. So let's see what happens. I hope you have a good finish to the month, and we will see you next time.